Good evening, traders. Adam here from Bold Logic doing the market analysis with you this weekend. Hopefully, everybody had a good weekend. I know I enjoyed mine. Got to watch my college team win in football, which is always a good sign. And then tomorrow, I get to watch the Texans go 5-0, which is going to be another great thing. But that aside, let's get on to the market because we need to prepare for this week. Bit of a shocker on Friday. We did have good numbers come out in the morning, at least somewhat good. Unemployment dropped for whatever reasons you want to believe. If it was rigged, if they're counting part-time, whatever. I'm not into any of that. I just like to read the charts. But either way, it was enough to get the market pushing and really moving. Friday morning was up over 1%, as you can see, trying to make its way into the 1470s, up to the recovery high, that 1474 level. It failed to do that. It actually pulled back, created a nice little doji candle on the day, finished in the red after a big run up, which is something that we didn't really like to see. It adds a little bit of a morale beater for the bulls. Bears are starting to get a little pumped here because they actually got some selling into the market. So definitely something to watch out for. You don't want it to be a bear trap and you get stuck if the market sells off. Some of the things we're going to watch out for is if we come back into that 20-day moving average, back into this lower channel or this lower trend here, and then maybe push back down into these support zones. We still have that 1440 level here, that 1430 level, and more importantly, the 1420 level. That's the one that's really going to matter for us is that 1420. A break below that, and we're going to get real defensive, and we're going to start turning bearish. Until then, we're still looking for constructive moves higher because we are still in this big uptrend. As you can tell, we're still making these series of higher highs and higher lows. That will be broken if we do break below that 1430 level. So we'll still keep that one on watch too, just because it'll be a trend changer. That's for the daily moves. If you want to look at a weekly move, all right, my weekly chart doesn't want to seem to work. Let's try it like this. All right, much better. So as you can see, 1420 level, this trend line right here goes all the way back into our big topping pattern in 2007, 2008. It was major support there as we see the big top come in, big top, the breakdown, and the test back into that 1420 level where we then faded down into the beginning of 2009. Catch up to a recent day and we see the test again to that 1420 level. Again, this is major support, major resistance level. So this is a major area to watch in case we break below that. That's what I was saying. If we do break below that, we're going to get real defensive and start getting real bearish. We did get that break above, and we can still test this area and be very supportive for a bullish case just because a retest of the breakout area, especially one this strong, is definitely a good move and a good sign that the uptrend will continue. But a break below it will definitely be something to watch out for. And as you can see, we are still kind of flagging here off these highs when we look at a weekly chart. So we are still being very constructive, even though Friday was a bit of a buzzkill. We are still being very constructive on that bullish case. So make sure you keep these levels on watch during the week. The Bulls really should try to work something out here. They had good momentum going, and then they kind of lost on Friday. So we'll have to see if they can't recover. NASDAQ is telling a little bit different story. It's starting to form what we call a head and shoulders pattern, where you see the left shoulder, the head formed, and now we can start seeing a right shoulder form on this support, where we'll see a breakdown and they move lower. Apple was having difficult times. That retest of that 50-day moving average came real quick. We did see that head and shoulders pattern that we were alluding to really kind of form in and come to play. And now it looks like Apple will break down below that 50-day moving average and that support, at least until their earnings come out in a couple of weeks. I think it's October 25th, if I'm not mistaken. Make sure you check that. Then that's when we'll get some big Apple moves. Looking at the Russell 2000, again, a little bit more weakness seen here. Break below that 20-day moving average. We had a nice failed breakout here of this resistance, the 847 resistance. A failed breakout of that 20-day moving average. Definitely looks like our retest of the 830s in the cards, and then maybe even a pushback into that 50-day moving average at 823 right now. These are definitely levels that we need to watch and we really need to pay attention to. Just going into it and help us see if we can establish a trend, maybe bounce off support, maybe we're going to break through. We really need to play around these levels and just kind of see what's happening. VIX selling off into the lows, came down into the upper 13s. This is not support. There is no support on the VIX. I'm not even going to call it that. But it was starting to push its way back up. It still finished in the red. We're going to count a lot of that into weekend decay where they suck out the volatility and then they're going to put it back in come Monday morning. So we're not going to read too much into that. What we do want to read into, though, is the VVIX, which is the VIX of the VIX, pretty much is the volatility of the VIX or volatility of volatility. One thing that we are noticing is we are really low here in the lower 80s. And as we've stated before, this is usually a good time to buy. The last time we bought the VIX here was back in this candle, and then we had a nice big run up. We took 54% on long VIX calls, and it looks like it might be a good time to actually get long volatility again, just because it is looking like it's ready for a bounce. It's starting to look pretty oversold. So that's definitely another concern if you are a bull. Looks like the bears might have the upper hand here, at least in the short term. Again, in the long term, we are still being very constructive. We are forming a nice flag pattern here on the weeklies, as you recall I showed you earlier. But we definitely want to just be a little bit more cautious in the short term just to see what kind of movement we have and what kind of action we take towards these support levels if we come back down into them, especially that 1420 area. All right, everyone, good luck this week. We'll be back every night with a market analysis to help keep you on top, but definitely keep an eye on those levels.